It's Brian Preston, the money guy.
So here's a really good one. This one is from Ryan to kind of start us off, and it's in the realm of car buying. And Ryan says, I know you guys preach 23/8, but what about financing for a longer period and paying extra each month to provide more flexibility for investing for the future? Love the show. He's saying, so, okay, I like this, and I run into this all the time with friends, young friends who are making their first car purchases, or maybe they're upgrading that family automobile. Like, hey, I hear you, Bo. You talk about 23/8 all the time, but man, that 3-year payment makes me a little nervous. And the dealership told me, hey, I can finance it over 5 years or over 6 years, but I can still pay extra to still pay it off in 3. What are some considerations I ought to make as I think through that?
The majority of car loans out there don't have prepayment penalties. That's the first thing. So look, I have no problem when you go to get that vehicle and they offer you some teaser rate where it's 48 months, 60 months, 1.9%, and there's no difference. You get no benefit to doing the 36-month loan. You can take the 48 or 60 month because that's your legal commitment, and it does give you flexibility. So maybe if you're squeezed, maybe some life event or you get tight, you do have flexibility, but that is what your legal requirement is to keep your credit up. But that's not actually what your internal commitment to yourself to keep your financial mutant status is, because I still want you to have that car paid off within 3 years. Because here's why we say 3 years. First of all, cars outside of 2021 depreciate like rocks. I mean, historically, cars are not keepers of value. So that's always something that you can just see the value falling off. And the last thing you want to do is get in a car accident and you owe more than the vehicle's worth. Now, I know there's going to be folks out there say gap insurance, but what are you doing when you buy gap insurance? You're actually paying for something that I would rather have my money working for me than to pay for an additional insurance policy because I don't really own my life. So that's a big part of it, is the depreciation. But the other part is guys, I want to keep your eyes from getting bigger than your wallet, because it's easy with dealerships, because now the average length of a car loan for a new vehicle is 72 months.
I can't even get my head
think
around
about it.
Most people don't drive cars for that long.
Well, and I think that's partially what's driving some of these prices of luxury cars, sports cars. Why are these impractical vehicles the ones that are rapidly appreciating in this distortion of a marketplace we're in right now? It's because there's a lot of fakers. There's a lot of people that want to look rich rather than be rich. And so I'd rather give you some constraints to keep yourself honest with yourself, so that you don't look at, a luxury vehicle and go, you know what? The payment on that Honda Accord is this, but for $50 a month more, if I stretch out my payments for 5 years or 6 years, hey, it's only $50 more. You're not paying attention that you added 3 to 4 years to your financing. You don't really own your life. So that's why I want you to constrict that. And then don't ever, ever, ever forget, your monthly investments have to exceed your car payment, because how can you ever build financial independence if all your money is going towards lifestyle purchases like vehicles instead of building your army of dollar bills in the background?
Yeah, I think that's great. I love that you're asking the question of flexibility, and it is okay, but just recognize that with additional flexibility comes additional responsibility. And if you find you're one of those people that if the minimum payment is X and all you're ever going to pay is X, then maybe do that 3 years so you force yourself to have to pay it off in 3. That was a great question.